Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1834th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video coming at you on a Wednesday night for trading Thursday, September 27th, 2018. Traders, please remember futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders. Stock trading, ETF trading, options trading, you name it, it is risky. This is a risky deal. Please know the risks behind this game. Never, ever trade without stops. So let's get moving. What's going on for trading on 9/27, which is Thursday? Well, today was Fed day number 2. The Fed raised their rates. Market came down a little, and I have to say, I was all set up to go short. I looked at my NASDAQ, I looked at the Russell, I looked at everything and said, perfect, let's go short. Then I pulled this S&P chart up, and I'll tell you right now, I am going neutral. I am not selling into this, not yet. Here's why. Look at this wonderful channel. From the first time it ever hit, any time it's ever been hit since, it seems to hold. This line, especially the support line of the channel. The bottom line. Then the market rallies off that line, hits the top, gets near it, bounces, gets right to it, check mark, it holds, and we go up. Comes back down, gets just about right to it, check mark, it holds, we go up. Comes back down, gets right to it, check mark, it held, we go up. Came back down, got right to it as of Wednesday's close. There should be a check mark coming next, and me saying we went up. That is the pattern. And technical analysis is nothing more than being able to be very crafty at spotting repetitive patterns. Bouncing off this line is a repetitive pattern. Unless we break that line, I am not selling anything. It is supposed to hold here and move higher. Now, if it breaks the line and settles through it, well then, fair game. But for now, let me respect the repetitiveness of holding this trend line. Check mark will end up going here by Friday if all goes well. So we will not take a trade. I am going to go neutral. Instead of going short the S&P or NASDAQ, we will go neutral, and that's how we will, I guess, handle the S&P trading, the NASDAQ trading. However, there's other markets to trade. Let me show you what else is out there. There's a couple of pretty cool things. So you've seen the S&P chart. Let's go over here. I'll show you why I was so ready to sell the NASDAQ. Because this, if you ask me, is a good old-fashioned swing day, and this should lead absolutely positively to the market moving lower. That's what's called a swing day. You're supposed to sell that swing day and expect the market to drop, but not after seeing this S&P chart that I just showed you. There's no way I'm selling it right now. There's just no way. So ixnay on pulling a trade off of this chart, the NASDAQ, because the S&P is telling us to just wait one day and see what's going to happen. So that's your S&P and NASDAQ. We're going to look at gold and a stock in this video, so pay attention. Let's go look at the gold. And here we are with a pretty gold chart, and I am taking a short position in gold if I get blessed and can get a fill for trading on Thursday. Come on down to my live trading room at livewithoscar.com. Join me. I'm in my trading room every day, and I'll explain to you what I'm doing in gold. Remember, we were in this channel for quite some time. Let me make it dark for just a moment. We were in this channel. It was a great channel. Every time we got near the top or bottom of it, you could count on this channel working. Well, the channel has become old news. And that's why I've made the channel very light, opaque, if you will. And the new kid on the block is now what I like to call a pennant flag. And look at the way it respected this pennant flag at the top and at the bottom all the way until now. Now you're underneath the pennant for 4 full days, and if you ask me, this is very, very likely a bear flag right here. Very likely this is a bear flag, and we just started to break down through it. I know it's a little bit sloppy. I'm drawing it on the fly for you, but that looks to me like it's some form of a bear flag, and we're probably going to break down from it for trading on Thursday. least that's my take on what we're looking at here. Bear flag building below the bottom line of the pennant flag. That's interesting as far as I'm concerned. So let's keep our eyes on gold. I will be selling rallies in gold. And as I promised, let's go look at a stock. I think this one is promising for the future. Let's go with AGN on this. Check this stock out. Look, a good old-fashioned cup and handle formation. Here's the big cup, undoubtedly, right? Fits really well. The handle butts right up to that cup. And this should lead to higher pricing. Bullish for the future is AGN. I can probably come up with a trade for us tomorrow if you want to see where I would buy it. I've already triangulated and I know where I would be looking to get into AGN. If you'd like to find out, come on down to my site, livewithoscar.com, and I'll be more than happy to show you what I'm going to do in AGN. That's it for now, traders. Remember, join me in my live trading room and keep your emotions out of trading. One of the best things you can do, in my opinion, to help keep those emotions at bay is put your darn stops in, please. And then, once your stops are placed, say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, you've got my reasoning why I will not sell the NASDAQ or the emini S&P until we see what happens at the bottom of that channel, why I think AGN is bullish for the future, and why we will be selling rallies in the gold. Join me at livewithoscar.com.